East is on fire, literally and economically. As military conflict between Iran and Israel intensifies, global markets are experiencing a wave of uncertainty. In this episode, we explore how this geopolitical clash could shape the future of crypto, oil prices, and the US dollar, and what investors should expect in the coming weeks. Oil prices skyrocket amid Middle East conflict. Iran's strategic location and vast oil reserves make any escalation with Israel a global economic threat. As of now, Brent crude has surged past $95 a barrel, the highest in nearly a year, following reports of drone strikes, retaliatory missiles, and warnings from both sides. The Strait of Hormuz, a narrow choke point through which nearly 20% of global oil flows, is at the center of concern. If access is even partially disrupted, the shock to global supply chains could trigger inflationary pressure across every continent. For ordinary people, this means more expensive gas, higher shipping costs, and renewed pressure on central banks to delay interest rate cuts, or even raise rates again to contain inflation. Flight to safety, the dollar rises again. Historically, in times of war or global crisis, investors seek the safety of the US dollar. That's exactly what we're seeing now. The dollar index has climbed sharply as institutions and hedge funds retreat from riskier assets and move capital into cash, US treasuries, and gold. But this rising dollar isn't without consequences. Emerging markets, especially those with high foreign debt, are feeling the pressure. Currencies like the Turkish lira, Indian rupee, and Brazilian real have started to slip as capital flows back to the US. This shift could worsen inflation and poverty in vulnerable economies, especially those that rely on oil imports now made more expensive by both higher prices and a stronger dollar. Bitcoin's identity crisis, hedge or risk asset. Initially, Bitcoin reacted like a risk asset. It fell nearly 6% when the first reports of conflict broke out. But within 48 hours, BTC rebounded, pushing past $70,000 again. Why? Because in times of global distrust in institutions, some see Bitcoin as a digital alternative to gold. Unlike fiat currencies or centralized banking systems, Bitcoin is decentralized, censorship-resistant, and borderless, making it attractive in times of geopolitical turmoil. However, not all of crypto is benefiting. While BTC and Ether showing resilience, altcoins, especially meme coins and low-cap tokens, are getting crushed. Investors are rotating to quality and liquidity. Also worth noting, US regulators and intelligence agencies are reportedly monitoring whether crypto is being used by sanctioned states like Iran to bypass financial restrictions. This could revive discussions about stablecoin controls, KYC enforcement, and exchange crackdowns. A new financial reality. Beyond immediate price moves, this war could accelerate the shift to alternative financial systems. Just like past crises birthed new tech revolutions, prolonged instability might push more people, and even countries, to adopt crypto reserves, diversify away from dollar dependence, or explore commodity-backed tokens. As traditional structures get tested, decentralized finance may present an alternative pathway for those seeking independence from global power struggles. War changes everything: markets, politics, and even the way we think about money. Whether you're in crypto or traditional finance, staying informed is no longer optional. This isn't just another market dip, it's a shift in the global narrative. So stay sharp. The next move might not be on the chart, it might be on the battlefield.